Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, finishing off the week with a bang. So essentially what's been happening is we've been closing at extremes the last 3 days. We closed really strong back on the 2nd, we closed really weak yesterday, and now we closed extremely strong again today. The reason for the strength that we saw today was a bit of a trifecta of fundamental reasons. Oil had a bull break overnight that started things off. We then had more bullish than anticipated jobs numbers, and also China cut rates, and China had a big 3% day in their market. So all of those things led to a significant bull day. Essentially, this is what I anticipated to happen 2 days ago before the Apple fiasco kind of threw the bulls off a little bit, but completely recovering and seeing continuation. So we now have a clear daily trend change where we had the low of the dump, the high of the initial bounce, our higher low was set at the low of yesterday, and then the bull break for continuation. So the daily trend has changed. This is now our most important support level, 243.67. As long as this level holds, our daily uptrend is intact. We zoom out to the weekly time frame from here, and we can see that we know we are going to form a weekly lower high because the last resistance is up at 280. So we would have to see a 12% move from here in order to break that resistance. We're looking for this equilibrium. We've been looking for this equilibrium for a while. The bounce did not get much follow through initially. Now this is reaching the target of, initially I had a target of the mid 250s, and we'll see how much momentum we can get going forward. But essentially we're just going to be looking for the low of the dump, the high of the bounce to give us a lower high in the mid to upper 250s, a pullback for a weekly higher low, and a continued tightening range through January into February, essentially, is what we're going to be looking for. So congrats to the bulls. Certainly a significant move today. And IWM is a bit of a canary in the coal mine, and we've called it this in the past, and another trader on social media called it that early this morning as well. But IWM holding really well. We had an inside bar yesterday. It broke bullish today, so we hardly even consolidated for IWM. It was giving bullish signals first is the bottom line, and that's something to pay attention to because it can give a little bit of a clue as to what to be anticipating for SPY. So the weekly for IWM, we're looking for the same thing, where we are looking for a lower high on the weekly and then a higher low and an equilibrium. And why are we expecting equilibriums? And again, this is just the way markets work. We had an equilibrium, the initial dump with our higher low, or we had a low of the dump, high of the bounce, higher low, double top, bear break. We had it back in February, equilibrium, long drawn out with a clear bull break. So these equilibriums give great signals when they tighten up and eventually break. And in my opinion, we're going to get another one because when you see significant volatility and entrance into new price territory and you have price discovery, that's when equilibriums form. And that's a reason why people go bearish in VIX after those big spikes, because markets tend to reach equilibriums, and that's volatility dropping off as we tighten up. And that's why VIX sees big time spikes and then just slowly fades, and people long-term short those big spikes. So IWM, bulls in full control. And we're going to be looking at hourly uptrends on these names like SPY and IWM, because as long as the hourly uptrend is intact, the bulls have complete control. If we lose the hourly uptrend, we zoom out to the daily, and then we look for the daily higher low if it can hold 243.67. For IWM, same thing, hourly uptrend intact. That's what we're going to be watching. Key support is 135.86 to maintain that uptrend. Bulls ending the week strong and trying for continuation into next week as well. We're going to continue watching oil. Covered oil and natural gas hourly equilibriums in the video last night. They both broke bullish, and we're going to be covering those in the commodities video, probably put that out tomorrow. So Apple, I entered Apple bullish today. That was my main trade for the day. And we'll zoom into the 5-minute time frame because my trade was based on the S&P 500 seeing some strength. So we started with a higher open on Apple, and I always watch extended hours as well. So we had the higher open coming. And after the first few candlesticks, I saw that the S&P 500 was holding up really well, just under key hourly resistance. It was on the verge of breaking the hourly lower high pattern on SPY. And I really liked the hourly setup on Apple as well because of the lack of resistance once we break bullish, if we break bullish. So we had an inverse head and shoulders pattern with the left shoulder. This was the head. Pre-market consolidation was the right shoulder. And if we got the bull break of 144.95, that's a break of the hourly lower highs. There's a few more resistance levels and then a whole bunch of space for the bulls to work with. So my anticipation was if SPY breaks that hourly pattern bullish, we're going to be looking for Apple to break bullish as well. And again, lack of resistance there. So I made a little bit of an early entry. I didn't wait for the break of resistance like I normally do. And it ended up looking like it was going to be a bad decision because SPY broke bullish and broke its resistance, and then Apple kept topping out at 145 for 20 minutes in a row. Finally got its bull break, and they really picked it up for the next couple hours through the morning. So I entered in the first, 3 candlesticks of the day. I entered, I believe my average was about 144.48, something along those lines. I placed my stop loss at break even eventually, and I missed getting stopped out by 1 penny right there. So that was fortunate. I took half of my profit before Powell started speaking at 10:15, just to lock in a little bit of profit, take some risk off because we don't know what the reaction to the market's going to be. Obviously a bullish reaction, and taking partial profit, I cannot stress enough how scaling into and out of positions is great for your psychological well-being. Because when I scale out of a position, if I take profit and the price pulls back, I say, great, I locked in profit and we started pulling back. If I take profit and the price keeps going like Apple did today, I say, great, I still have half of my position and I'm still making more profit. So it's a great way to, not be completely in or out of a position in just one decision. And it allows you to get more information essentially before you completely enter or exit a position. So I am currently swinging Apple overnight. We closed strong enough. Again, I took half my position off. That eliminates a good amount of risk for me. And with everything closing so bullish, that's the direction that we're going to be looking in. Another thing to mention is Netflix. So Netflix, and I actually drew this descending wedge, and I'm not really a wedge guy. They're not visually what stands out to me. A lot of people use wedges, and that's great if it works for you. I generally am not, but I might have to start because I drew this wedge. We have a weekly call on Sundays, and I drew this last Sunday and said, keep an eye on this. And then we got the bull break, a brief little back test, and then obviously huge follow through now breaking bullish from this descending wedge on the daily time frame. And essentially what happened is Goldman Sachs loaded up over the past couple of days and then puts out their upgrade, and we see a 9% plus day today. And this happens all the time. And you see it on the opposing side where, retail investors hate when people short stocks and then put out a report. This is why we're bearish the stock. And people hate that. But bulls do it all the time. GS, without a doubt, was buying Netflix because we could very clearly see that Netflix was the lead tech bull for the past few days compared to Amazon, Facebook, Apple, Google, any major tech name. The past 2 days of trading, Netflix has stood out as a lead bull. And now we get the answer as to why. GS was buying, loading up, and they are rolling in the money in just 2 days' time. So whenever you get an upgrade by a bank like that, just assume that they have already loaded their position, and everybody that's buying after that upgrade is all retail traders and maybe some other hedge funds, but they're just, paying cash in the check for GS who got in earlier. It closed extremely strong, and obviously a very significant shift in momentum on the daily time frame. We're watching for the bullish cross of this 12 and 26 period. We got the bear cross in the 380s. It held up for a couple months, and now we're looking for this bull cross. Weekly time frame, very significant break. We're looking to break the lower highs and shift momentum. And longer term on Netflix, the monthly time frame, pretty significant consolidation, but this is the bottom is in for now on Netflix. There's no doubt there because of the size of the bounce we've seen. At this point, it's well over a 20% bounce. So congrats to Netflix bulls, especially those that bought the dip. QQQ in the tech sector, so very similar to SPY. We had the low, high of the bounce, higher low, and then a bull break to continuation. So the daily trend has changed on QQQ. The next resistance level is 160.72. Again, we zoom out to the weekly time frame, and we anticipate that a lower high is going to form on the weekly time frame, but we're not going to have the indication that the weekly lower high has been set until we lose the daily uptrend. So the most important support level is that daily higher low of 149.49, and any consolidation we see next week, as long as we hold that level, it maintains the daily uptrend. XLF, financial sector, similar to IWM in the sense that it gave us a daily inside bar with very little consolidation and then got that continuation. So most important short-term support is 23.40. Next resistance levels, we're going to be looking up at 24.39 and 24.58. Same thing, we zoom out to the weekly. We know a lower high is going to form on this bounce and a likely equilibrium. But as long as the daily uptrend remains intact, the bulls are continuing their bounce, and a close at the high of the day shows that strength. VIX on the daily time frame. So VIX is continuing to drop off. Daily inside bar broke bearish. And again, this is, you short the spikes on VIX when things get crazy, and we always return to equilibriums, and those equilibriums are when VIX drops off significantly. So we're going to look for VIX to do an equilibrium as well. We still have support of 2034, and that's going to be a key level on Monday. If that level breaks, it'll be notable for the long-term shift. We will still be looking for a bounce and a lower high to form, but that will be a big setback for the VIX bulls. So a lot of fear and a lot of volatility leaving a lot of fear leaving the market. And we're going to look for the VIX here to continue pulling back until SPY tops out again. So that's where we stand as we head into the market. Again, a lot of noise, and a good point by someone that is learning how to trade. And their point was, it's really overwhelming with all the headlines and all the news and all the things to have to pay attention to. And it, might keep them from making and acting on things that the charts are saying. And they had the realization, maybe I should just stick to the charts and skip all the noise. And it's certainly important to pay attention and know that, Powell's talking today at 10:15, anticipate some volatility picking up. So those things are important to know in terms of timing of stuff, but it's always sticking to the charts and, looking at the weekly time frame for SPY, unless the market was going to fall apart and we were going to get a weekly bear flag into another leg down, we knew to be looking for this bounce to be getting a decent amount of follow through into the 255s. So it's all about the daily uptrend from here. How long can the bulls keep it up? And then we'll look for a tightening weekly pattern. And that weekly pattern breaking is going to be a great signal as we head into February, in my opinion. So hope you all have a great weekend. I'm out of comedic material for now, so we'll go back to nature. And we'll see you all on Monday. Steep sheep peeping.